Hello, my name is Newton Marcus, and I will show you the three subjects of the minor that I found most interesting, and I'm going to give you examples of why I chose these three subjects to talk about. The first subject that I found interesting is the technical analysis part, because I did day trading before this minor a, a few years ago. And by day trading back then, I learned a few things like support and resistance, highs and lows and stuff, but I didn't know the nicks and crannies of what it actually means to do a good technical analysis. And this minor helped me to improve my technical analysis. And the things that I learned, the things that I learned, I'm going to show you in this technical analysis. So we are now on the weekly chart, and you can see that the price is actually moving up because you can see at number one, this is a higher low point. This point is higher than this point. So that means it's a higher low, and a higher low point is only in a uptrend. So this is a big uptrend. Number two is a trend line that makes the uptrend more clear to see. Number three is also a trend line, but for the tops to actually, yeah, to make the trend more clear for everybody to see. Number four is actually the downtrend. So it's a downtrend, but it's a big pullback, you know. So it's very steep downwards. So this is a big pullback from this bigger uptrend. Number five and six show that the uptrend is broken and that the moving averages are cor- crossing bullish again. So that indicates that this uptrend is going to continue. This point right here shows that the uptrend is continuing also. It's another confluence because this point is higher than this point where the number one is. So this also indicates the ongoing uptrend moving higher. Number seven also indicates a uptrend. It also indicates a higher low point, and this is number seven because this touches the trend line for the highs. Number eight signifies the higher low point from number one. Number nine and 10 actually show the structure level. So if we zoom in, you can see that number nine is a level where the structure is on this just on the weekly chart. So you can see that the price hit this structure level one, two, three, four, five, six. It broke here, but it pushed back up. Six, seven, eight, 9, 10, and you can go on. So this is a big level in price, and it is also around a round number between 102 and 104. Number 10 is also a big structure level because you can see here it broke out a little bit, but it came back down. The wicks on the weekly chart are actually big moves on lower time frames. So the wick hit here, 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 and here, here. So the wicks on the weekly chart are actually bigger moves on the smaller time frames. So the wick here hit, the wick here hit the wick here, and also at this point. So this and right here there was a double top in the structure. So all these confluences indicate that this is a structure level to look at when price approaches it. And number nine also. Knowing this, knowing all these confluences and looking at the chart, we can say that price is going up. So I'm looking for a long trade. Now I'm going to the 50-minute chart because this is my execution chart. It's a big jump, but uh, let's go to the 4-hour chart. So if you look at the 4-hour chart, you can see that right now we are so right now we are in a smaller downtrend. So you can see the lows, the highs, lower low. Actually, yeah, lower lower high from this point, but this is like a fake breakout from this point because it broke out, but it broke down and pushed price lower. So now we're here. So I'm actually looking for a lower high and then a higher low point from this on the 4-hour chart to see if price is going up. So a higher low from this point, like here or somewhere here, shows me that price is going up, and this downtrend may be breaking, which adds to the confidence we have and the idea that we have of the price going up according to the weekly chart. Now we can go to the 15-minute chart, and this is my execution chart. And so you can see that I put a limit order in because I told you I'm looking for a higher low, but also on the 15-minute chart. So the downtrend here, you can see. Um, so this is like this is a bigger move, but you can see the lower high, lower low, lower low point. So the fake out that I pointed out on the 4-hour chart is actually here. So then it faked out, doubled up, and then it went down, lower high, and then pushed down. Now we are here. But as I said, the higher low on the bigger uptrend, the higher lows on the bigger uptrend are being respected. So this is a higher low point on the higher time frame. So when the structure right here of the downtrend on the 50-minute chart is is broken, this can indicate a uptrend because the candlesticks on the lower time frame made the candlesticks on the bigger time frame. So if structure here is broken, then I will take a trade to this point, and if this take profit is hit, I will go up and adjust my take profit levels. So yeah, so you can see my stop loss level is at $90 because I want to risk $100. That's 1% of $10,000. That is a effective number, of course, but this is the amount that I want to risk. And my take profit level is below the previous structure, so it's like a 1-to-1 1.09. That is my risk to reward. And my yeah, that is my risk to reward ratio. And my yeah, and my position size is actually, let's do an example. $10,000 times 1 point times 1 divided by times 100 is my position size is 19. So 19 shares. My position size is 19. So this is my technical analysis for the chart of Nike. And yeah, so for a quick summary, the trend is going up because the highs because the lows on the weekly chart are going up and the highs of the weekly chart also go up. The downtrend was broken from 2021 and until 2022. The downtrend is broken, and now we are in the uptrend because the higher low point from this point because this point is higher from this low, so that indicates a uptrend, and this is on the weekly chart. So when prices go up on the weekly chart, I know that I'm looking for a long and that I'm looking for a break of a downtrend on the smaller time frames. And this was the first thing, the first subject of the minor that I found interesting. So the technical analysis part, looking at the higher highs, higher lows, structure levels, um, chart patterns in combination with candlesticks on significant levels and the risk management. So looking at where you put your stop loss and where you put your take and where you put your take profit and what your position and how to calculate your position size. The second thing that I found interesting was the investing part. Ricardo, he taught us in the beginning of the minor that investing, that is the part where you make the most money. Because day trading or just swing trading, trading in general is making money on daily of daily fluctuations uh in price. And 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 to make moves based on those fluctuations is very hard because news, emotions, confluence, all of those things have a very big role in how the price moves. So your day trade may go good, but when news comes out that is a- that contradicts your bias on your trade, then your trade will go the opposite way and you will lose money. So in the long run, day trading is not a strategy that will give you the returns you want if you want to build wealth and uh, a a stable financial future for your family. if you want to do that, then you have to look at investing. So investing is long-term trading. So you put a amount of money in a stock or a index fund ETF or something like that, or in real estate, and let that money grow. So when you put money in a asset and the value goes up, your money goes up. So when Ricardo said that, that really hit me because investing is very important. When you buy a house and you pay your mortgage every month, this is considered normal. But when you talk about the S&P 500 to people, they think it's very hard to invest and it's weird. But if you pay, it's normal to pay your mortgage every month, but it's not normal to put a few $100s in a S&P 500 fund for the same amount of years that you would pay your mortgage off. So I was looking into that and I started to calculate. So this is a compound saving calculator for the S&P 500. So if you put your money into the S&P 500 for a amount of years, then it will calculate what you would get after the amount of years that you want to invest. So if you start off with $0, you want to save for 5 years, because you want to buy a house in 5 years, and you need money for the down payment. If you look for a fund that gets a 8% annual return, and you put $900 into that fund every month, and you want the interest on your monthly investment, and you want your interest and annually on the monthly investment that you make, then this chart gives you a calculation of how much money you would have after the 5 years. So you see, the first year you have put in this amount of money, and this is what you have. So this is your investment with your compound, or or no, this is your investment with your interest. And the compounding part is letting your investment with interest stay in your account and let the interest um, go over that amount. So the next year, so in year two, you would have in year two you would have the initial investment and the compound and the interest of year one with the interest and the investment in year two. So every year you invest money, and the interest is calculated on 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 that investment. And if you let the interest that is calculated from your investment stay on your account, and you let it right to next year, and let the interest of that year also be calculated your on your current balance that is made up of the investment and also the interest of last year. This is called compounding. So if you compound the interest of your investment every year, then you would have $66,000 after 5 years. That's a lot of money. But take if you start when you are 25, you have $66,000 when you are 30. With that money, you could open like a franchise store. With that money, you could buy a house. But if you do it for like 30 years, let's say, you would have 1.2 million $2 million. So when you are 55, when you are 25, you would have $1.2 million where you are 55. And this is a good age. When you look at people of 55 right now, most of them don't have even the half of that money. And if you played smart, you can get interest on that money, so like 8% from between 8 and 10%. That means you would get $100,000 each year, just free money. With that money, you could live, and now you have like peace in your mind, because you don't rely on your paycheck from your work to live off of. Now you have two streams of income, and now you have the freedom and the peace to look at, okay, if I want to I want to build a company? Do I want to build a family business? Can I build a business, and can I let my children run that? Then when you have that amount of money coming in each year, then you can think of those things, of starting a business, starting a family business, etc. So the investing part is something that I found really interesting in this minor. The last part was the sentiment analysis. The sentiment is actually um, the emotions behind a stock or a trade. So what people think, and the hopes that people have for that financial asset. So let's say, for instance, Bitcoin. The last few weeks, Bitcoin was approaching a all-time high, and this got a lot of people hyped up. So people are buying and are not thinking. So the fact that people can make a lot of money is so powerful that they will buy Bitcoin without even looking into what Bitcoin is and what it could be and what it does and what it did in the past. So the the hope and the greediness, that is just skyrocketing. So the sentiment is very positive, because uh, because people see what it could do. People hear more about it. People hear the amazing stories. People that don't know technical analysis see somebody on social media saying that, okay, when this level breaks, Bitcoin is going up. And if you see that, and you don't know what it is, you would think that you could make a lot of money. But there is a lot that goes into that. So the sentiment is actually the emotions and the feelings of the people that that uh, the sentiment is actually the emotions, the feelings, or the hope of people that they have for a specific financial asset. So when news is very positive, then people get very greedy, and then the sentiment goes up, because people are buying and etc. When the news is bad, people are getting scared. They're getting anxious, and they want to sell. And that fear results in a negative in a negative sentiment. So the sentiment is very interesting, because this could lead to bad trades and bad investments, if you don't know what you are looking for, and what you are looking at. So I want to thank you for listening to my presentation. These are the three topics that I found the most interesting of the minor. So the technical analysis, the investing part, and the sentiment analysis. And thank you for listening.